Hello, everybody. Welcome to Levelhead Trading. This is Jason here, giving you my analysis on Tesla. Just finished making a video on Tesla and realized that I had said Boeing in one of my parts, which is another video that I'm going to be working on. But anyway, I'm going to go into another time frame, which I said I wasn't going to, but I'm going to do it, which is the hourly, just to kind of give you the nitty gritty of what's going on the last few days. I'm going to talk about mainly some daily inside bars in a sense in the last couple of days. The retest of the reverse head and shoulders that just took place, and then heading for the gap fill, trying to jump up into the gap where there's no price action and filling that gap. That's the first stage that we want to accomplish on our way up. So getting into it. So here's my daily, let me see. This is the daily chart. I drew a little line on the bottom. Most importantly, one thing that I was taught is the most important thing is creating higher lows. It's not so much the highs that you make, but whenever you do pull back and you're in a trend, you don't want to break the higher lows. So I drew this line on the daily chart showing you a nice little setup here, which shows the higher lows up to this point. So here's the bottom, and then we go up. This is inside of the inverse head and shoulders. So we haven't changed the trend in this set of days. And then here, and then here, and then here is where we make the first daily trend change. So that's the first step. So then what took place after that is we have a retest. This candle 2 days ago is a retest of the breakout area. Notice we needed to get over 196.36, right, in order to confirm the trend change. So this candle brought you over the 196. Then we came back and we dipped all the way down to 189, but we closed at 193. So we still didn't we didn't go lower than the higher low, which is this one. So that's the most important thing. But this is a test. This is testing back here. Are we going to get pulled back down and not really make much movement at all, or are we going to hold it and then say, okay, we've got buyers and now we're ready to take off and push further? So today's candle, I like that, even though we're still in between the high and this low. We're in between the 203.17, which is so far the highest high that we recently made, but we're above the low of 189. So we're pretty well above the low, which was 189. So we're about $8 above this level here. So that's good, but we need to get over 203 to confirm that this is the next higher low. We could stay tomorrow on Friday within this range, or break above, or hold it and not break either way, and then go into next week before we get a result. But for sure, next week we will get an answer whether we're going to make a higher high, or we're not going to, or we're going to break to a lower low. So what I wanted to do is break down the nitty gritty details of these 4 days and show you what it looks like on the 1 hour time frame, which is really the next level below the daily time frame when you're talking about stocks, because there's only six and a half hourly candles a day. So on the hourly chart, this is what's happening. Here's the high, here's the low, and now we're just squeezing back and forth, not making a higher high yet, not making a lower low. So it's a battle between this level and this level. The other thing that I like to use, even though it's not that important on the, it is important. This is on the hourly time frame. This is the 200. I like to use this now on everything that I look at. I have the 200 in there on everything. If I'm looking at an hourly chart, if I'm looking at a 15-minute, 5-minute, a daily chart, a weekly chart, monthly, not really monthly because there's such a gap that it's too hard to make decisions on that. But see, what's happened is we caught up to the 200-hour moving average. So the first time we get up there, right, it's going to act as resistance almost all the time because there's no new news. We're just going off of, momentum really, and people saying, okay, you know what, I think I'm interested in buying some Tesla. So we hit the 200-hour moving average, we pull back, but we hold the higher lows at this point. Now we get up again. You notice it's kind of like how I talk about these lines, the 12 and the 26, but those are more recent. So those, when you're going back and forth, it's going to go above it and below it constantly. But the 200 is a much longer time frame. So then you get more of a clear reaction once you finally get there. So that's what's happening on the hourly time frame. So now going back to the daily, what we want to do is make a higher high, get over that 203, and then we should be on our way to filling the gap, which is right up here at 206 on the low side, 207, and then potentially up to about 216. So you have that kind of range there because notice the wicks on these candles, that's where selling came, and that's where selling came. So somewhere you might get maybe as high as 212, probably no higher than 217 initially. So this is the next target. That's what we're looking for. We're trying to get up to the gap fill, and that would be the 38.2 retracement level from the big picture, from coming down from 299 going all the way down to 175. If we get up to that area, then that's going to be about a 38.2 retracement. So here's how it is on the daily chart. Again, we're in a daily squeeze. We should get the result either tomorrow or Monday or Tuesday of next week, I would say for sure. It should happen by that time where we break out in one direction or the other. So now on the weekly chart, last part of the video, this is how it looks. So now on the very hopeful side on what we really want to happen is to get a 61.8% retracement. So if that were to happen, if we continue the daily trend and keep pushing higher and higher and making higher lows and higher highs, then we're looking at the 200-week moving average. And that's all the way up here. And that actually lines up very closely, I think, at this moment to the 200-day moving average. So they're very similar. And if we were to do that, if we were to retrace 61.8, then we will have another touch right around here at this weekly trend line. So this is a sloping, a descending weekly trend line. So right now we're on a daily uptrend, but we need to eventually at some point change the weekly to a weekly higher low and then eventually a weekly higher high. But that will take much, much more time, weeks and months for that to happen. So that in the big picture, that's what we want. We want to get back up and retrace 61.8% of the way, and that could bring us up to $225 to $235, and then we'll smack up against the 200-week moving average. And if that were to happen, then that should be resistance, and then we see what happens from there. So my last thing I'd like to say is I have a video that I made on Boeing. I just have one video, but I will make another video shortly. I'm very interested in that also. There's a gap fill on the downside that I'm waiting to happen, which I think will happen, where Boeing then doesn't have to gap down, but it'll fill the gap, just like in reverse what I'm talking about with Tesla going back up to 206. Boeing is in an area where there's a space dropping it. And right now it's currently at about $201. There's an area down around 195 to 189 where there's space for it to fall down into that range. And then that's where I will be interested in. I own a little bit right now, but similar to Tesla, I just bought a little bit of Tesla at the very low 200s, and then I added more recently since I missed that bottom at 175. But anyway, if you'd like, check that video out, and you'll see some more of my technical analysis on Boeing. And for the new subscribers, I appreciate that on this channel, and hopefully I can get some more. So I'll talk to you soon. Have a good day.